Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
I don't know if you have another minute, but I have one
Sure.
last question. Could you possibly explain why we cannot predict future prices? This is from Andrew.
Other than just say we can't, we can guess, and we can use a lot of indicators. We can use Elliott wave. We can use a lot of things that make us think we can predict future prices, but the reality is none of us can. What's very interesting, you often see economists and a lot of currency analysts do a whole lot of work and predict interest rate futures and where interest rates are going to go. But I think most people that are around long enough know that you can't forecast where interest rates are going to go no matter how much data you have. And number two, if you can forecast interest rates, it doesn't necessarily mean you can forecast currencies, as I showed you. So, you know, getting this game of believing we can forecast, and trust me, I've done this myself on too many occasions, believing I can forecast where a currency rate's going to go. And that's the time that tends to get you into trouble the most, because you tend to believe it in your story and you don't look to the market to invalidate your story, and you stay with the trade and keep thinking you're right and the market is wrong. I think the best we can do is understand some of these underlying real drivers of currencies and look for these setup conditions. Sure, use your indicators that give you an edge, that increase the probability that you're going to be right, more so than not because of the system that you're using. You can increase the probability of being right, but the reality is we can never be certain that we're going to be right.
Thank you. That was very helpful. So so please, there were a few more questions, but definitely direct them at the email I just posted for everyone, ask@fxoptions.com, and we'll definitely try to address all of your additional questions. And thanks again. Thanks to Jack specifically. It was really very insightful and interesting. Getting all that background on how currencies are valued. He's going to be back in a couple of weeks on talking about trend trading using FX options on the 17th. Next week we have Tony Hansen talking about longer-term strategies for managing currency moves. And definitely check out our website for additional upcoming webinars, archived recordings. We also have 2 podcast series available, and market commentary and educational articles you can access. So, so thanks again, everyone. And,
Lynette,
yep.
I can't answer this this one question.
Oh.
I take a second on this thing. I saw a gentleman asked about central bank intervention. And part of that's a biggie, and I especially now you see the Swiss talking about intervention. It's another one of those things that ultimately we can't predict that. A lot of banks make a lot of noise, and there's a couple points that make number one. Often when you see central banks intervene, if they do it against the trend, it's a softball for the speculators to go against the central bank. So always be careful of first determining the trend and see what side the central bank ultimately comes in on to intervene if it does. New Zealand made this mistake a while back. Last year they came in and tried to intervene to sell off the New Zealand dollar in the midst of a powerful uptrend in New Zealand, and the speculators just jumped in and took the little blip down as another reason to buy the New Zealand dollar at a lower price, and it just powered higher and higher. So one, we can't predict when they're going to do it, but two, if they do it, understand the trend that they're doing it. And number three, if they do it with the trend, in the direction of the trend. This gets into what's called the Rubin rule of central banking. When Rubin was Treasury Secretary in the U.S., when they were still in the midst of doing some intervening, Rubin being a very good trader from Goldman Sachs, Rubin did a lot of things, but he actually was a very good trader and knew the market very, very well. He basically laid down this rule to the central bank, especially in the U.S., and said, if we're going to intervene, the only time we're going to intervene is in the direction of the trend to help it along. So if you see central bank intervention, often where the trend's already changed to help it along, that's the type of intervention you want to follow. So understand the trend background first, wait for the move to be made, and if you see the trend background in which it's made in, I think it'll give you a type of signal at least which way to go in terms of probabilities. Hopefully that helped.
Thank you. So thanks
Sure.
again, everyone. Have a great evening, or actually, depending on the time zone you're in, it could be morning. So thanks again, and we'll see you next week.
Thank you. Take care, everybody. Appreciate all your time.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.